Hey guys, how's it going? It's Andy from Magoo Investing. Welcome back. Hopefully everyone had a nice couple days off. During that time, surprisingly, Friday was the biggest drop in the stock market so far in 2021. So in today's video, I'm going to be talking about some of the Black Friday deals that we're finding in the overall stock market, because for the past couple months, the stock market has been relatively stable, and we've had some new news stories coming out of South Africa that have really spooked the market. And I'm going to be talking about some of the information that you really need to know going forward. I'm going to talk about kind of some of the ways I'll be playing this going forward. And finally, I'm just going to be talking about why I don't think this information actually matters that much to how my investment strategy is going to be changing going forward. This is also going to be the last video that is coming out with the current iPhone that I've been recording with. Thankfully, I'll be getting a new one that will be coming on the day that you're watching this, and I won't need to use AirPods to record anymore. So let's talk about why Friday was the worst day in the stock market that we've seen in 2021. When we show this graphic, you'll see that the Dow Jones is down 2.5%, when the next closest days, the past four, were around 2% drops, and the most recent being July 19th. So it's been a long time since we've seen a relatively large drop in the overall market. And when you look at the overall market, you see S&P 500 is down 2.2%, Nasdaq's down 2%, Dow Jones, as I mentioned, down 2.5%, the Russell 2000, which is the small cap stocks, which were really the winners of the beginning of this year, as a lot of these speculative stocks in nature were doing really well, was down almost 4%. And I remember in some parts of the day, it was down closer to like 8%, so it did better towards the end of the day. Volatility, which is the VIX index, was up 54%, and Bitcoin was also down 9%. Since I've started to record this video, or plan to, Bitcoin has bounced back around 5%, but we're going to be talking about Bitcoin because it has reached a bear market territory. Bear market usually talks about the overall stock market, but it has been used pretty regularly to talk about Bitcoin as well. And what this means is it's down 20% from its recent highs when it was trying to bust through the $70,000 mark. Now it's kind of sitting around the mid 50s, and it makes a really interesting conversation because in the past, Bitcoin has been seen as this area to kind of dump cash away from US and international markets. But with the pandemic, you can kind of chart to see how Bitcoin has done in relation to some of the major US market indices like the S&P 500, Nasdaq, and Dow Jones. When I put that up, going back to March of 2020, when you see the first major drop because of the pandemic, you'll see that Bitcoin kind of follows the trend of the overall market indices. And it has a lower low, which, makes a lot of sense. Bitcoin had come off a very large ride to the upside. And as people were kind of freaking out, people were pulling their cash out, and there wasn't really a safe haven because people were very confused and uncertain of where things were going to be going. But as 2020 continued to move on, Bitcoin ended up being the top performer compared to, the overall market, but it had lower lows and higher highs. And now as we're talking about what happened this past Friday, you see the same thing. You see Bitcoin down almost 10% and the rest of the market down around 2 to 2.5%. So what we're going to be looking at going forward with Bitcoin is we're starting to see it getting bought back up. That 5% move that I mentioned today has been bought up in a relatively short amount of time. And so with Bitcoin, I don't think this is the time for me to be putting large sums of money into it right now. I have changed my investment strategy when it comes to Bitcoin, but I think Bitcoin's going to kind of follow to see where the markets are going in the next couple of days as more information comes out with this new strain coming out of South Africa. So let's talk about why I'm not really worried about the market going forward, because we are a year and a half into this pandemic. We have a new variant coming out of South Africa that really spooked the market on Friday. When you look at the losers on Friday, you really see the same names that were losers at the beginning of the pandemic. You have airlines that were down pretty big. The ETF that follows the overall airline industry is Jets, and that was down around 7%. Cruise stocks, if you remember, were one of the hardest hit stocks that began the pandemic. Carnival was down 11%, Norwegian was down 11%, and Royal Caribbean was the bigger loser, down 13%. And let's talk about why I'm not worried, because the market was really spooked on Friday, and when I first saw it, I was like, really? That's what's going to do it? So we have this new variant coming out. We're at the point now, I'm not going to be talking about politics at all, but realistically, I don't see anything changing. The people that were going to get vaccinated have been vaccinated and will be getting their booster shots in the upcoming weeks and months. The people that aren't going to be vaccinated are going to be pushing back against any lockdowns, and I don't see any lockdowns happening again at this point. We have shown that the markets can survive with stay at home, people working from home and not being in overall offices without the overall economy collapsing. We've shown these larger retailers, stuff like Nike, that we weren't really sure if they could do well based on their online markets, have done pretty well. And You have these stay-at-home stocks that have been put into place to kind of have this infrastructure that we really didn't have set up fully when the pandemic first started back in March of 2020. What this does mean is that volatility is at a recent high. As I mentioned, volatility was up 54% just on Friday compared to how it's been sitting below 20 for the past couple months. What this means is that selling options has become attractive again. When you have low volatility markets, it's not attractive to be selling options because you kind of get to the risk of the stock taking off, and since you sold a premium, you're not going to be able to take advantage of that upside. When volatility is low, it's really beneficial to be buying, not selling options. And as we see this large spike above 20 for the VIX, I'm going to be selling options again. But I do think it's really important to remember that volatility could continue and the market can continue to fall. So I'm going to be staying away from all meme stocks or just highly volatile stocks because we really don't know where the volatility is going to go. And I only want to be buying stocks if I get assigned that I really enjoy. So I'm not touching meme stocks at all with this strategy. But right now, I am seeing this as a buying opportunity. I'm going to be buying back into more blue chips. Apple and Microsoft were down more than 2% on Friday, which is pretty unusual for them. So I'm seeing this as a buying opportunity overall, and I'm going to continue to watch to see what happens going into this week. If the volatility continues, I'm going to be selling more options because I think that's really attractive, and it has not been an attractive strategy for the past couple months. So let me know what you guys thought about the overall market this past Friday when we had the biggest down day of the year, down 2.5% for the Dow Jones. Do you see this as a buying opportunity, or are you going to kind of wait on the sidelines to see what happens overall? Thanks for watching this video. I appreciate all the support. If you made it this far, I'd really appreciate it if you hit that like and subscribe button, and I will see you in the next video. Thanks for watching.